Welcome to the 2% Club. Today, we're going to be talking about market structure, the basics of the market structure, like how the market moves in an uptrend and how the market moves in an downtrend. That is what we are going to be looking for today. Now, let's dive into it. First of all, if you view the market, if you view the financial market, the first thing that will start come to your mind, you have to understand where is the direction of the market. And the only thing that will help you to understand the direction of the market is the market structure. And you have to understand the basics of market structure for you to find where is the direction of the market, where is the market is heading, what it's gonna, what will the market is gonna be doing. That is why you have to understand the basics of the market structure. Now let's try this. Now, first of all, let's start by explaining the market structure in an uptrend. Then slowly we are going to narrow down on market structure on a downtrend. First of all, if you open your chart and you are start seeing the market start moving up, down, up, down, up, down, up, down, up, down, up, down in this kind of structure, that means what? It's creating high, 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 low, high, 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 low, high, 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 low, high, high, which signifies, which defines like, which defines that the market now is an in uptrend. You are to look for buying opportunity. The market is an what? It is in an uptrend. You start to look what for a buying opportunity because of what? This high is higher than the previous high. This high is higher than the previous high. This high is higher than the previous high. That means the overall trend direction now is an in uptrend. And this is where we call what higher low, and this is where we call higher high. The reason why we call this higher high is because it's higher than this high. It's higher than this previous high. The reason why we call this higher low is because this low higher low is higher than the previous low. That is why we call it higher low, and this one is higher high. Now, if you understand the market basics of market structure is an uptrend, it simply means if market is breaking structure to the upside like this, if market is breaking structure to the upside like this, it means what? The market is an in uptrend. And while if you go back to your downtrend, in a downtrend, we have what? If you see market, or let me just say, if you open your laptop or tab or whatsoever you're using, analyze the financial market. The moment you start seeing the both direction of trend is start going up, down, up, down, up, down, up, down, up, down, up, down. It's trying to tell you that what now the market is an in uptrend. Sorry, is an in downtrend. Sorry, downtrend. Because it's in downtrend, it is creating what lower high. Sorry, it's creating higher low, a lower low, higher low, lower low, higher low, lower low, higher low, lower low. And the reason why we call this one as higher high low is because of what? This high is what? Is higher than the previous high. And this high is previous than the is higher than the previous low. That is why it's called higher higher low, high low, higher low, high low. And this place is called what? Lower low, lower low, lower low, lower low. The reason why we call it lower low because of what? This low is lower than the old previous low, and this low is lower than the previous low. This low is lower than the previous low. This is the complete basics of market structure. If you see this structure in the market, it means what? We are in an uptrend. If you see this structure in a downtrend, we are what? We are in downtrend. The moment you open your chart and you start seeing this kind of structure, it simply means we are hitting the down. We are going down. But if you come back and see this kind of what structure, that means what? The market now is moving to the upside. This is the complete cost, and I believe that if you watch this to the complete in complete course, you are going to understand. If you see the chart, if you see the movement of the market is going in this direction, you understand that where is the market is heading to. And if you see this kind of structure, you will understand that where is the market is going to. I think that's the little things that you are gonna you like you're gonna need for you to to start analyzing the chart. Because if you lack the concept of the market structure in the first place, there is no way you are going to you can analyze the chart because the market moves in up and sideways. This is your basis of market structure in uptrend and downtrend. And if we talk about basis of market structure, we have what the market moves in three ways, which is what sideways and what which is what is sideways, upward and downward. In sideways, this is what you are going to be looking. You are going to start looking what the market start moving like this in this one in this structure in this structure in this structure. The market will start moving in what in this structure. Very equal. This is what the another direction of the market because the market can only move in three ways. The market can only what move in three ways, which is what uptrend, downtrend, and sideways trend. This is the example of sideways trend. The way you can going to understand, or let me just say how you are going to define the sideways trend is by you understanding the fact that in a sideways trend, there is no break of structure. Price are not breaking structure. They just move in equal side. Price does not what? Price does not price does not like break structure like what? Like in an uptrend. Price what? Price breaks structure because of what? When price goes up, goes down, goes up again, it breaks the previous high. That means what? It breaks structure. The same thing in a what? In a downtrend. Price goes up, goes down, break structure here. That means what? This is what break of structure. But if you come back to your what? To a sideways trace, there is no break of structure. There is no what? Break of structure. That's the basics of market structure. The other way of like let me just say the market move in choppies and all of that, that one is not good for you to be trading choppy market. The only market that you may consider to trade them is like like I said, the uptrend, downtrend, and the sideways trend. But as a beginner, I will prefer you to focus on what? To focus on these two things. If you master these two things, upward and downward, this sideways trend will not gonna be something complicated for you. That's how the market moves. The market moves in what? Upward, downward, sideways. Go and master it. Have a nice day.